municipal closed-end funds, there's still numerous closed-end funds that trade at discounts between 7 to 9% discounts. And that is, in our opinion, that's an opportunity for additional yield and potentially additional total return.
Muni investors saw a setback in 2013, but this year the municipal bond market has shown signs of strength. John Miller, a longtime municipal bond fund manager for Nuveen, sees positive trends at work and potential opportunity for municipal closed-end fund investors.
Credit trends in munis as a whole are more healthy. It's a very diverse market, it's a very fragmented market, and overall revenues are up and expenditures are down, and the actual probability of default is down. But that was lost in the noise in the second half of 2013. It appears to be a little bit better received so far this year.
As Miller views the municipal bond landscape, he sees a partial recovery underway, with munis rebounding from last year's slump.
The recovery, I think, has been driven by, first of all, U.S. Treasury rates fell so far this year. They didn't rise. That was contrary to expectations. But it's not just interest rates. When it comes to municipals in particular, they're not pure interest rate vehicles. They also have a lot of relationship to credit trends and supply and demand trends. Credit trends, as I mentioned before, they're actually improving. Individual issues require good fundamental underlying research, but overall the macro trends are improving on the credit side. Municipalities are not issuing as many bonds, and demand is starting to recover. So hence some outperformance so far in 2014.
Investors looking at tax-free investments may find attractive yield spreads, that is, the relative yields of munis versus other types of debt securities.
Munis, as you go out the yield curve, and it's a very steep yield curve, munis trade at a high ratio of yield relative to treasuries. Most munis yield more than treasuries as you go out the yield curve. So municipals yielding in many cases as much as corporates, in many cases a premium yield over and above treasuries, they still look attractive. There's value there. And in addition, for lower rated credits, for BBB rated credits, for non-rated credits, those credit spreads are wider than their long-term historical averages, which is unique and different than many of the other fixed income markets where credit spreads have narrowed.
History also suggests that municipal bonds may be positioned for a rebound in 2014.
Historically, when munis have had a tough year, they have tended to bounce back sharply and strongly the following year. So 1994 was a year of rapidly increasing interest rates. Munis got hit, muni closed-end funds got hit. 1995, they came roaring back. 2008, munis were getting hit. 2009, they came back sharply. 2013, munis got hit. So far in 2014, they're coming back sharply. So you will be exposed to potentially higher levels of volatility in these cycles that we go through. But on the flip side, municipals do have a history of being very resilient and bouncing back from these downward cycles.
John Miller of Nuveen, sharing a perspective on the municipal bond market. For more information and data on closed-end funds, visit our sponsors at efconnect.com, the authority on closed-end funds. Thanks for watching. This is Closed-End Fund News.